I got something to show you guys, and it's gonna change your life if you're a business owner. Let's get it. This letter right here is the holy grail of tax strategies for entrepreneurs. Whew. Did y'all hear that? Oh yeah. This is the IRS Form 2553 confirmation, the official receipt that your LLC is now taxed as an S-Corp. This paper will save you thousands in taxes throughout your business lifetime. In this video, we're gonna talk about how this piece of paper will save you thousands, which business owners will benefit from this, what you have to do to actually become an S-Corp, and your new responsibilities as an S-Corp. Let's get to the whiteboard. So in order for me to demonstrate why an S-Corporation is better than a sole proprietor or an LLC, we're gonna put both of these businesses on the same playing field. And at the very end, we will show you exactly how much money you will be paying in self-employment tax or how much you'll be saving in taxes. Let's say as a sole proprietor or an LLC, your income is $150,000. And in this example, your expenses is gonna be $50,000. So your net profits in this case is 100 grand. The thing about being a sole proprietor or an LLC, this entire $100,000 in net profit is subjected to something called self-employment tax. Self-employment tax is 15.3%. That means you're paying $15,000 in self-employment tax. The whole point of an S-Corp is to avoid and lower your ability to pay this self-employment tax. So as an S-Corporation, it's gonna be the same exact thing. $150,000 in income, $50,000 in expenses. Your net profit is exactly the same as the sole proprietor or the LLC. But in this case, this $100,000 is gonna be split into two different ways you pay yourself. One is gonna be salary. In this case, we are gonna take a $40,000 salary. The other $60,000 is going to be a distribution. In US tax law, self-employment tax is only subjected against the salary. So now this $40,000 will be subjected to self-employment tax, which is around $6,000 in taxes. Now the $60,000 of distributions is not subjected to taxes. So now we are saving $9,000 here versus that sole proprietor on the left-hand side, just for going to an S-Corporation. But I want to scale this because the savings becomes even more drastic as we scale your business. So let's say we take this S-Corporation, now you're making $200,000 of profits. Your income is $250,000, your expenses is still $50,000. That means your net profits is $200,000 in this case. I'm gonna scale you up. Now your salary is gonna be $80K, all right? Your distribution is gonna be $120K. So in this case, your self-employment tax again is on this 80, which is gonna be roughly $12,000. Then now we're avoiding self-employment tax on this distribution. So now your tax savings in this case is going to be around $18,000. And that is only because you elected to become an S-Corp. So there is an actual sweet spot in which you want an S-Corp. You need to be making over $50,000 or more in profit. And when I say $50,000 or more in profit, I'm talking about you made at least $100,000 in revenue, you had $50,000 in expenses, and therefore now you have $50,000 left over in profits. The reason why we're gonna do that is because there are other fees associated to becoming an S-Corp. You need to have a payroll provider. You need bookkeeping. You need to pay me or your CPA a higher fee to do taxes. And if those fees outweighs your tax savings, then it doesn't really matter about S-Corping. That's why a lot of people say you have to be making at least 50 grand. Personally, I really want you to be making at least more than $70,000, $80,000 in net profit before we even consider this strategy. Generally, the types of businesses that most often use this strategy are like real estate agents, insurance agents, content creators, coaches, consultants, medical professionals, e-commerce brands, barbers, stylists, specialist. Essentially anyone scaling a solo business, this is a pretty good strategy. When you have more than one partners, things start to get really complicated, so that's where things like salaries and distribution can really complicate whether or not it can work out for you. There are some cons, or I call them responsibilities that you have to do. So before you go off and running, trying to become an S-Corp, we have to do some things. Number one, you must file the Form 2553. To elect S-Corp status, we have to file another form to get this form. You must file that form within 75 days of forming your LLC or your C corporation, or you must file it by March 15th of the year you want to be an S corporation. Heads up, many online entity creation platforms do not file the Form 2553 for you. They say, hey, you want to be an S corp, you sign up to become an S-Corp, they don't actually file it. I've had to actually file that form on behalf of so many clients thinking they're an S-Corporation, we file their taxes, it gets rejected, and we have to do this whole thing to get it corrected. Now, if you're watching this video, there's a good chance that you actually did not file this form and you are likely really past the deadline. Luckily, the IRS is forgiving about filing it late. All we have to do is provide a reasonable cost statement on the Form 2553. If you need help doing this, give my firm a message. We file these forms. Number two, you cannot wing it anymore. You must have bookkeeping. You need real books, a profit and loss statement, a balance sheet. If you're not ready for real bookkeeping, then this strategy is not for you. Number three, you need to run payroll. You need to issue yourself a W-2. This part is actually really easy, but for some reason, a lot of people don't do it. That means you're not in compliance, and that could lead to penalties and interest if they find out. Number four, you need a reasonable salary. In my illustration earlier, it's obvious that a lower salary that you pay yourself, the lower in taxes that you pay, but you can't pay yourself $5,000 and take a $95,000 distribution. There is a balance point that we need to meet. Your salary needs to be reasonable based on your role in industry. My firm provides reasonable salary services, but here's how it works from a high level. Let's say you're a real estate agent and you're doing your own accounting, customer service, marketing, etc. We are going to blend all your roles together and figure out your average wage. If you suck at accounting, then you should get paid like an entry-level bookkeeper. But if you're amazing at customer service, then that will also be reflected in your wage. This part can get really complex, so I highly recommend getting a professional to do this for you. And number five, you must now file a corporate tax return. This is separate than your personal one. Welcome to the S-Corp life. This return is due on March 15th every single year. So now you have a business tax return and a personal tax return. My firm also handles filing taxes, so if you're ready to do it right, please give us a call. Look, this little paper is a key to a tax strategy, but a key to respecting your business like a real business. There are a lot of requirements that we have to do, but if you're tired of overpaying the IRS and you're finally ready to make real money, save on taxes, this might be your next big move. If you have any questions, please drop them in the comments. Like and follow if this video helped you guys out. I'm here to make the tax code make sense. Until next time, everybody, peace.